The echo indicator. Here are the general steps to using the echo indicator. The first is you're going to want to define what style of trading you're going to be doing. I mean, it's obvious that you're going to want to know if you're going to be using a scalping method or some more long-term method. If you're just buying stocks and holding it for years and years, that might be a consideration in terms of how you look at this indicator. 2, identifying the trade direction for that style. So regardless of what style you're trading, the next step will always be to identify the trade direction for the style. Once you've identified trade direction, then you begin looking for echoes in the same trade direction as the long-term time. So regardless of if you're holding things for long-term periods or scalping very small amounts, you'll always be looking at the longer-term trade direction to be doing same trades in that direction on this indicator. And then to help get better price, we will always be looking at the really small term time charts to position our way in. Now, part of our determining our echo style, you kind of see this sign here where we really have a choice. There's really not a wrong way or a right way when it comes to choice. It's really, what are you trying to accomplish? Are we buying something that we're going to be holding long term, or are we doing something that's going to be very short term? So really, there's only 2 choices here. Is it long term or is it short term? And there is kind of a different answer in terms of what you're trading that you would consider long and short term. Long term, you'll obviously be focusing on the longer term charts. Short term, you'll be focusing more in on the short term charts. Now in Forex, you may consider, and this could be off again depending on how long term you want to go. The long term, generally speaking, would be between a target of 50 to 100 pips. And you'd likely start somewhere possibly on like a 30-minute chart. You're not going to start on a 1-minute chart to try to get 50 to 100 pips. Another example on the Forex market, but for short term, might be 5 to 20 pips. And you would likely start this type of trading on a 5-minute chart. If you're trading futures, a good example is long term, maybe 1 to 2 points. You'll start on a 30-minute chart. Short term, trading maybe quarter point, half point, 3/4 point increments, you'll start as small as a 1-minute chart. So if you're trading short term, these are the charts that you'll be using. And if you remember in our synopsis video, you've got your echo indicator on the bottom of your chart, and then on the far right you have all these different times listed. We call these different levels, right? The 1-minute level, the 5-minute level, 15-minute, 30-minute, 60, 240, 1 day, and the 1 week. Well, if you're trading short term, you're really only going to focus on the shorter term charts. Let's say the 1-minute, 5-minute, 15-minute for this example. You may also reference to the actual chart, which will have the same indicator, but only the chart selected and those below it. So you could select the 5-minute or the 30-minute as well, and then just see the time frames below. But these would be the sections that you would be focusing on more short term. Now, if you're doing things more long term, you would focus in on, let's say, maybe the 30, 60, 240, and 1 day section on your chart, or you'd be referencing and clicking on your 30, 60, 240 chart on the bottom. So you have a couple different options, but if you're trying to get a click in, you'll often use the charts on the bottom, the ones selected in blue, to look in at what it is you're doing. Because it makes no sense to be looking at a 1, 5, 15-minute chart if you're trading long term. So you'll probably click over to a 30-minute, use it as your top chart and then only focus in on everything below. Here's a reference of some short-term charts, and you can see that we've clicked on a 1 minute chart, and you can see here the reference has 1 minute on the top, and on the bottom you can see that the 1 minute chart book is highlighted in blue. Like we discussed previously, if you're doing something long-term, you may not want to see the shorter term charts and start on maybe a 30-minute chart or a 60-minute. But you can see that here we've selected the 30-minute, it's highlighted in blue, and you'll notice that the indicator is also reflecting that, with the 30-minute being the top level on this indicator. Now, how do we determine, once we've determined our style, whether it's long-term or short-term, how do we determine echo direction? What is the trade direction that we'll be trading? Well, this can be determined a bunch of different ways, but let's find good trade direction, both long and short. Now, this is an actual screenshot of something that you very likely will see in the future as you're trading this. It seems rare, but it does happen, where you'll have very clear short-term positions and long-term positions. Here on the top, you can see that this is a very good example of a short-term area, because we're looking between the 1 and the 60-minute, and these are all giving us sell positions. So this would be a short-term short or sell position. Also listed here is a great example of a long-term. So this is a good example of a time to look for a long-term or buy position. So the top would be great if you're doing short-term positions in the market. The bottom would be perfect if you're doing more long-term ones. The top right now is signifying short as our direction. The long term, the bottom, is signifying long as our direction. How do I know that? Because red is a signal for selling, green is a signal for buying. Okay, once I've identified the trend direction, then it's time for us to start looking for the echoes in the market. So here you can see the 30 and 60-minute level have given us a short trend. They are solid in red, meaning that the trend is short in those longer term charts. So if I were able to scalp in a 1, 5, or 15-minute chart, I could look for those signals when the green turns to red. So you can see here on this 5-minute chart, the green flipped over to red. If I were to look down below that on my 30 and 60-minute chart, the long-term effect has still been short. So all this green was on this 5-minute chart was an echo in a short-term trend. And so I'm just waiting for that echo to fade to have a continuation in that trend. You can see here on a 15-minute chart the same thing. 15-minute chart went from green to red. This was just a little segment of buying that happened in a short-term trend. And so as that echo ends, I'm looking again to sell with the longer-term trend. Now this is more long-term trend, where those were more short-term, because I'm getting some trends up to my 240 going long. But this is a buy trend, meaning that the market is going up and will continue up. And I'll be looking for echoes of the red to turn to that same color to buy in the market. And you can see here on a 5-minute chart, it did that. It went from red to green. So because my long term is green, when it turns from red to green on my 5-minute, that would be a good buy opportunity. Also on my 15-minute, the same thing happened where it went from red to green. This again would be a great buy opportunity. Now, once you've identified that you're in a good buy or sell position, you can either put the trade in just based off that signal, or you can do something that's called positioning. Now, what positioning allows you to do is to scrape little segments out of the market to just get a little better price. It's not going to get you much, but it will help you a little bit with price. Now, obviously, to do positioning, you're going to be looking at one of the highest level time frames. In this case, positioning is pretty simple on the echo indicator. Most likely you'll be looking at the 1 or 5 minute levels, so one of the top 2 levels. So if, for example, if buying, you'll look for the box color to change from red to green. The opposite is also true. If selling, look for the box color to change from green to red. And you would do this on the top chart. So here's an example of a positioning to sell, or position to sell off. So if I had gotten a bunch of sell signals already, the green turned to red, this would be a great signal to sell. And I could make, fraction, if we're trading Forex, fraction of a pip, maybe a pip or two in terms of giving me a better position. S&P 500 or futures, it might be as much as a quarter point. Okay, here are some basic echo patterns. I want to start by saying that there are multiple patterns with this indicator that exist. And once you start to trade with it and you start to see it, they become very easy to identify because we're dealing with 2 colors here. So there's not really a lot of taking in information and seeing small divergences between lines. There's really just 2 colors. And so being able to identify and remember patterns is much easier with this indicator. But here are some very basic patterns that do exist in the market where you will see buying or selling occur afterwards. This is what we call a step pattern, and you can tell that they're called a step pattern. They're easy to identify because it looks like stair steps that you would walk on. So these stair steps can either go up or down, and they will signify a certain position in the market. In this case, this is a great pattern to sell, and you can see why. The trend is short, so my long-term charts are saying red, and my green just started to step off. You see that? So my green starts to step off into the red, and so this would be a great signal to sell. And so I would just wait for the green to turn to red, and that would be a good signal to sell with the continuing short trend. Another good signal on our 5-minute chart, 5 being on top in this case. Another good signal on our 30-minute. So multiple sell signals through this short trend. Is there one that's better than the other? The answer is always yes. There always is a stronger signal even out of these 3. I would say our strongest was our second, so that middle one. And the reason is because I had more long-term charts that were red, and I'm also not at the very end of the drop-off in terms of from green to red. This is a really good signal, however, where you see all this red. Everything turns to red even on the 30 minutes, so that last one. But sometimes how long it will last will not be as effectual as the second one that we saw here. So this is a much quicker entry point, obviously, using our 15-minute chart to get entry than our 30-minute. Here's another step pattern, and this is doing the opposite. So this would be a pattern for buy signal, where our last one was sell. And again, it's easy to identify, it's easy to know because what's the general color that you're seeing? In this case, it's green, and the other one, it was red. So the general color that you'll see, and of course focusing towards the right, is going to be what we look at. But the general trend is long, so our bottom levels are green. You can see here as it stepped off from red to green, it would be a good buy signal, another good buy signal, another good buy signal. And then we echo, you can see the red that occurred both on the top, second level, and third level, a little echo that happened here. And then the price started to go back into the general direction where we had another good buy, and another good buy opportunity. So these are what we call our step patterns. Another good pattern, and this one's really easy to remember, again, we're just talking about very general patterns, is what we call our blackout patterns. Blackout is like it's like bingo, right? If you ever play bingo and they said, okay, we got to do blackout, that means you've got to get every box right on your bingo chart to get bingo. Well, blackout's very similar in that we're looking for most of the general color to be that direction or that single color. So in this case, with most of the color being red, both long and short term, obviously this is going to be a sell signal. And then we're going to use our top levels for entry. So when it goes from green to red, I would sell. From green to red, I would sell. From green to red, I would sell. From green to red, I'd sell again. And so this is a great, very easy to read signal because everything's red. Where you can use a very similar method but with less levels. Another pattern that you will often see with the echo indicator is what we call a wall pattern. Now, sometimes these will look similar to steps, but they form more of a linear line than a step pattern, meaning there is kind of a step off. Sometimes there's not at all. Sometimes it's just a solid wall. But basically, it is what it sounds like. It is you see a visual wall present itself on the levels where you can see it went from red and then hit a green wall. Now, walls are a little different. We trade them a little differently because of the new color direction on multiple time frames, short and long term. This is often a signal that there's going to be a large change in direction. So when you have the colors change like this from red to green in almost a single state, it's not much of a long-term step off. This is a good signal that the market has changed directions. And so your actual new trend has become, on the 60 and the 240, has actually become long. So this is a great pattern for a buy signal. I've got a short trend here on the bottom, but you can see that as the wall occurred, my trend ended. I still have a short trend on my daily and weekly, but unless I'm holding the trade for a couple days or weeks, I'm not really that concerned about these bottom two levels. But because of 240 and 60, this should give me plenty of time to scalp in the market, maybe 10, 15 pips in the Forex, half a point, 3/4 of a point, maybe even a full point on the futures market.